Coronavirus concerns calm for now. Guys, all this week, the theme has been very much about dumping of safe haven assets, right? We've seen weakness in yen, weakness in CHF, particularly if we look at the FX market, so Swiss franc and Japanese yen, because, we've seen big efforts from the Chinese authorities, the government and obviously the PBOC, the People's Bank of China, injecting some cash, some liquidity, some stimulus into the market to try and offset any potential damage from the coronavirus that it may have on the economy, right? So real efforts there. There was some positive commentary as well coming out of the Chinese president, Xi Jinping, trying to calm everyone. They're trying to contain this. They're making good progress on that front. And then also we've seen China effectively halving tariffs on US goods. So real big efforts from the Chinese side to calm the market. So I believe that's one of the key reasons as to why we've seen the weakness in the safe haven instruments. And I think as well, it's somewhat of a needed correction, right? We had pretty much 2 weeks worth of this safe haven flow coming into the market. So it's only right that the markets have this period to consolidate, to recover, to correct, so on and so forth. We've seen a big pumping in the riskier assets, right? Stock market's been really rallying. We had a brief period of AUD NZD pullback, but they have continued to be hit quite hard because remember, they are impacted directly or indirectly rather because China is their biggest two-way trading partner, okay? So anything that happens with them is still going to have an impact on Australia and New Zealand, hence why their respective currencies have still been under pressure. Now, obviously all of this has gone under the rug for the time being in terms of the panic, the big panic regarding the coronavirus. But guys, it could still very well return. At the end of the day, this coronavirus is still spreading globally, okay? Still being the case is still rising across the globe. So on that, I believe if that continues to be the case, we will see the safe haven flows and the markets be spooked again, and those safe haven flows will come back. I'm sure of that. And another key point to note is obviously data is old at the moment, right? So data is always reported a month behind. So obviously for the month of January, we have seen the data being reported so far throughout February, right? So all of January's data. Now, February is where we're gonna really get to understand whether or not, February's data, whether or not the coronavirus had a real impact on the economies, right? So we'll look at manufacturing data for China, even the US, and globally and generally, because remember, China affects everyone, So those data points will start to come out towards the end of February, if not start of March, okay, to give us an insight into if this has actually had an impact economically or not. If that being the case, then also that's another reason why big drives in safe haven flows can come back into the market. Other than that, guys, as we always know, we cover everything, every single day, fundamentally and technically, tying it all in to help try and present those opportunities to you of what we're looking at and what we're looking to trade, and obviously digest that and break that all down for you for your own decisions as well at freaknetwork.io. So don't hesitate to check out membership. And if you just want to learn fundamentals yourself, guys, we have a course on this, forexfundamentals.io. Other than that, let's get it.